Hey, this is Timothy with JK Realty, the Flamingo Realtor, here with John Hegglin with Barrett Financial. We're going to talk to you the importance about down payments and how that affects your overall monthly payment, and also how that affects your overall owning of a home. So we look forward to you guys all watching the rest of the video, and subscribe to the channel. Nowadays, I always hear that I don't have enough money for a down payment. My question to you is typically, what does a lender want for a down payment for their future home?
There's no specific need or requirement for a down payment. There's zero down home loans you could do, all the way down to 50% down if you have it. So it's whatever is going to fit your situation and get you to qualify for that mortgage.
Okay.
So there's tons of options available out there. For down payment assistance to zero down loans, VA, USDA, low downs like FHA. We even have a 1% down program. So there's tons of options available, just whatever fits your budget and what you're trying to do.
Let's say let's say they buy a $200,000 home and they only have 10% down, so they're only putting 10% down. How does that affect their monthly payment? Because I was always told if you don't have 20% down, you're going to get a mortgage insurance premium.
Right.
And what is the mortgage insurance on top of that?
Well, when you have 10% down, you have a couple options. You'll have mortgage insurance, which you pay monthly, which it's a percentage of the actual loan amount, so it's going to vary. And then there's also an option that a lot of people don't take advantage of. Actually, there's two options people don't take advantage of. There's lender-paid mortgage insurance, where you can take a little bit of a higher interest rate, but then you don't have any monthly mortgage insurance. The benefit to that is then you have the higher rate is tax deductible, as opposed to normal PMI is not tax deductible. There's also an option of prepaying for the mortgage insurance right up front when you close on the loan. So you can prepay for the mortgage insurance completely and not have it. It's higher closing costs.
Yeah.
That's on a conventional loan.
Okay.
If you have an FHA loan, you're going to have mortgage insurance. There's no way to get away from it. VA is a good option for veterans because there's no monthly mortgage insurance and it's a zero down program. So those are some options available.
So if you, let's say, just go the mortgage insurance route, 10% down, at what point does the mortgage insurance now go away and now you're just paying principal and interest?
It's going to go away once your home hits 80% loan to value. So just simple math, if you buy a house and it's worth $100,000, when your loan gets to $80,000, you can call that lender and they'll do either a market evaluation or send an appraiser out to appraise that property. And if it appraises for $80,000 or less, or 80% of the value or less, the mortgage insurance goes away. With FHA, you cannot do that. You're always going to have it. It does not go away.
Okay. And you're going to have that for, just to make sure, if you have FHA, you're going to have that for the entire length of your loan?
You can have that for the life of the loan as long as you have that loan.
Okay. So would you be able to refinance that at a later time and make that go away after you get 20% equity?
You could refinance to a conventional loan and get rid of the mortgage insurance. You can certainly do that.
To continue on in regards to down payments, what are some things available to an individual who may only have 3-5% down for a home, but they really want to buy a home because they realize that for their net worth and for their financial gain in the future, that buying a home would be the right move for them?
There's, like I said, there's zero down programs available. USDA has a zero down program, so there's no money down required by the borrower. It's kind of a limited area, though, but if they're looking out, in more rural areas, Queen Creek, for example, is available for a USDA loan. We have a 1% down loan where we give, the borrower pays down 1%, and we actually give them a gift of 2%. So they move into the house with 3% equity in the property, which is nice. There's also a 3% down program where they just put the 3% down all themselves. There's FHA with a 3.5% down. So there's a lot of and VA loans, which is zero down. There's a lot of no down payment options or low down payment options that are available. People just coming in, and people that have already bought a house that are selling, they can sell their house, keep some of the equity, and just put a lower down payment on their house and kind of build their nest egg and their savings themselves.
And just for me, because I personally don't know anything about the USDA loan. When I think of USDA, I think like where's the beef commercials and stuff like that. What qualifies that, and what sets them apart, and what exactly are they?
It's just it's not a government loan program, but it's more for rural areas.
Okay.
Queen Creek, most of Queen Creek is eligible for that program. It is a little bit tighter on the debt to income ratios, and you have to meet a certain income limit to qualify for it. So you can't make, you know, $300,000 to get a USDA loan.
Okay.
You know, they do cap the income, so people are not taking advantage of that program. But it is available in some more rural areas, some parts of Apache Junction, Queen Creek, in the West Valley. There's a lot of areas available for that.
So let's say you have a family member who wants to help you move you into a home. What can they do to give you the gift so that you can use that money for a down payment?
There's a couple ways they can give you the gift. The easiest way is if they wire it to the title company.
Okay.
So the title company will have it. It's a little bit less documentation for the donor that's giving you the gift.
Okay.
If they give it to you in cash, then we need to see bank statements, your bank statement and their bank statement showing the withdrawal and the deposit to yours. We are going to need to see the donor's bank statement the most recent 30 days before the donation came, just to make sure they have the money available to make the donation. So it's pretty easy to do.
Thank you again for watching the video. I also want to say thank you again for John Hegglin with Barrett Financials, that guy right there. Really appreciate you watching the videos. I hope you learned a lot in regards to what type of money needs to be down for a down payment, programs available to assist you with getting you into your first, second, or fifth home. Again, all of our information is going to be at the end of the video. Click the like button, subscribe, and hopefully we can get you into your new home. Have a great rest of your day.